day all. Ira Epstein of Linn Associates with your agriculture wrap-up for this Tuesday. We're at the 3rd of September, 2019, and we're about 4:55 p.m. Central Daylight Time. I had a long financial update. That's what took my time. The boards have all cleared behind me, so I'm just starting you off on our weekly chart of soybeans. And the crop conditions came out. They were a percentage point less than the market was expecting, so that could be a little friendly for beans. It's only a percentage point. I don't get excited about that. Resistance back up on the weekly chart at 865 3/4, and this is a chart of closes only. I'll call the market still in a down thrust, though, on the chart, and you can see the pattern as to what it's got. Whenever you're under this key moving average, I call the bias either up or down. If you're under, it's down. If you're over it, it's up. And I use that as a filter on swing lines in some of the other studies. Now, one of the things we've been looking at here is a wedge formation. And you can see how these highs have come in. You got up on Friday, challenged, couldn't stay up anywhere, fell back pretty hard and came back. And by the end of the day, you were knocking on that number. I'd guess, the word is guess, I don't know, but the pattern it's setting up is if you take out Friday's high, I'd be pretty cautious about wanting to be short this market. It would be telling a story for the chartists that follow this type of pattern that the market might want to lift a little bit. In addition, even if you don't take that out, as long as you don't take out today's low again, you're setting up the potential for higher lows and a higher high according to the swing line. How do I know? Well, I wrote the indicator, so I think I know how it works. Take out today's low, a different element at work at this point. Where's the battleground? Well, I think we'd say it's the 18-day average of closes. As of tonight, are you trending? You are not. You have a higher high, lower low pattern. That is not a trend. An uptrend, higher highs, higher lows. A downtrend, lower highs, lower lows. We don't have that at work. We have a resistance point at 872 1/4. In terms of Bollinger Bands, which is an algorithm designed to keep the market trading within these numbers 95% of the time. They're going basically sideways. So we have a market that had been in a swoop to the downside, and it's suddenly just going sideways on us. We have a combination of resistance. If it cleared this high of 877 3/4 at 889 3/4 to 890, the 100-day average in green, the upper Bollinger Band. But the first point of resistance, if the market rallies, is 872 1/4, and should it just break, the Bollinger Band is your support. In terms of momentum, the slow stochastic, well, it's pointing upward. So I have momentum up, I have bias down because you're under the 18-week average, and I have no trend at work. A mess. In the meal market, you have a pattern of a higher high and a lower low. That is not a trend. You are oversold down to support at the lower Bollinger Band where it has been able to find support in the past. We'll see if it continue to do that, if it can continue or not. The market that's the strongest is the part that bothers me. If meal were leading the market, I'd say, okay, I get a little more excited about soybeans. When it's soybean oil that's the one that's got the swing line up and it ran to the resistance of the 100-day average, now that doesn't excite me the same way. That's not a sign of a lasting bull market, typically. I can only use the word typically. Now, the key here is, can it close over 29.11? It had an outside day up. It finished 29.09, so the 18-day average of closes stopped the rally. We can see where the market's been fighting. It's been fighting at this 100-day average. It was over it, fell to it, came back, rallied to it, got up, came back down today, and then went higher. So we know that that's one of the numbers, at least at this point, that's trying to act as something of a pivot in the market. And the first challenge of the resistance does put the swing line back up. This market needs a close over that 18-day average to say it's more bullish. In the corn market, no trend, embedded reading. This market's still locked in down. And I read one of the comments that we got on YouTube, and boy, are you right. You know, I remember back in May riding the elevator here, and I'm in the Board of Trade building, so you hear everybody talking markets all the time. Everybody up here was just super bullish this market, $5 corn. Now that you're down to the 360 level, I'm already hearing probably not much under the 350 zone. Well, 345 is the lower Bollinger Band, so I understand that, but whenever I have an embedded reading, my problem is that just rules the day. Why put a bottom zone on it? What I would say is if you get to the lower Bollinger Band, I would expect there to be some support. Lose the embedded reading, and I think you're setting up a challenge for the 18-day average. You haven't done either yet. In the wheat market, lower highs, lower lows. Spring wheat's not looking terrible. Market coming down for new lows on this whole move. So that's fairly important. Trend down, bias down, but oversold. Sugar market just can't mount a rally of any type that holds. The market's not embedding, which is important. It is oversold, but the trend has been down, and what's wrong with the soft commodities is the dollar is so strong. Anything priced in dollars has a disadvantage. So sugar's still staying low, still plenty of supply out there. Each time it's been hitting the Bollinger Band, I think the shorts are covering, and I think on the rallies they're putting it back out, although with an oversold condition, I don't know how much they're going to keep putting out. In order to embed, you have to have both numbers under 20 for several days. So we had it today. We didn't have it on Friday or the day before, just an oversold condition. In the coffee market, the 18-day average of closes continues to be an important number that is ruling the day. It's keeping the bias of the market to the downside. You're in a downtrend. Support comes in at the lower Bollinger Band at 93.87, and nobody's writing me that they called up Starbucks and said, how come they're not lowering their coffee prices, given you just came from 118 down to 93? Not hearing it. In the, is this cocoa? What other chart did we do? That was sugar, right. In the cocoa market, battleground's the 18-day average. Yes, you have the swing line with higher lows and a higher high. You finished at 22.45 over the 18-day average and momentum up. So at this juncture, I'm giving the bulls the full nod. I'm saying that unless you get back under this break low right here, which was 21.77, the odds, that's all it is, favor support still at the 18-day average. If it can rally, resistance 2270, and if you were to break through this low back here, even if you do so, you're right on to the lower Bollinger Band. I think the odds just favor this chart formation for those that are more bullish than bearish. In the cotton market, still very much a bearish chart picture. Lower highs, lower lows. See this sideways action? You've got to be careful. This sideways action is how trends, big moves within a trend develop. It's like a spring winding itself up in a pipe. Right now, the bears grabbed control. They have lower highs, lower lows. Admittedly, are on the lower Bollinger Band where there's probably some money coming out of the market, but momentum is now down with the market. Things are getting back in sync. You take them out of sync if you take out Friday's high, which is 59.30. So I can see where bears want to be a bit more aggressive in this market off that chart formation. I'm not saying you should or shouldn't be. Frankly, you're down in a lower Bollinger Band, and I don't think I've ever told anyone to sell a Bollinger Band. In the cattle market, the trend is down. Lower highs, lower lows. You have divergence because momentum's trying to come up. Now, if momentum leads the day and you get this market up and over Friday's high, which is 155, it gets very interesting because that would also put the market over the 18-day average of closes. Until it occurs, the bears have control, but they have a divergent market. In the feeder cattle, you can see how the 18-day average of closes is your resistance point. Momentum is flat. The trend is down at this point in time. Where the market took off to the upside was limit up in hogs. Now here's the formation that we had. We had coming in today already the pattern of higher lows and a higher high. What the market had not done is with that being able to maintain a close over the 18-day average of closes. The market did it back here, and that day was last Thursday, slipped back a little on Friday, and once it cleared 65.15, let me just say it was gone to the races. Now, why? Don't know the fundamentals why, but the market chart action is certainly good. Momentum's still up. If it wants to go higher after a limit bid close, maybe it can get up to the upper Bollinger Band. We'll find out soon enough. I talk a lot of these markets in what I write, in my oral updates, and of course, as you know, in my morning video. My morning subscriber video is where the meat of what I do for the day gets going. I've already had a chance by 4:35 in the morning, a.m. Central Time. And what I'm able to do is I've read about Europe. I'm certainly going to be all up on Brexit, what's going on right now. But be it the grain markets, the meats, I have a pretty good picture as to what's going on. And I start with a recording in the morning where I review all these different charts for you. And I'm telling you, buy here, sell there, do this. I can't do that in these. I can talk here the generalities of what my different indicators are doing. It's very different in my morning subscriber video. In my written research, I also put out buy here, sell there, here's a stop, here's what to do. But my written research is prepping you throughout the day for events like all the reports in the government that are going to come out tomorrow morning. My clients tonight will have all of them with the estimates, where they're at, how to look at what came out today late in the day, if anything, and they get their arm around things. If you'd like to try this, give us a call. You can go to our website, free trial, at www.iraepstein.com. It includes everything we have. Click up here. It'll take you to the free trial area there. Just click on it, fill out your information. We'll get you all set up. I'm Ira Epstein. You have a good day, and I'll see you tomorrow.